Happy Friday, traders. It's 8 a.m. Chicago time on the 22nd of November, 2019. This is episode number 1645. As always, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market stance overall is actually kind of mixed. Again, we have gold in the lead, up $5.20, trading at 1,468, followed by the Russell, up 0.33%. The Bund is higher, which is normally a safety asset, but also the bonds are higher, 11 ticks, along with the NASDAQ Dow. Like I said, it's a kind of a mixed bag in here. The British pound, the cable, is dragging, has lost several pips there, and the euro is off as well. The dollar index is at 97.91 even, and up 15, 10, 15, or penny and a half. It's teetering on the unchanged line. So that's where we stand this morning. The equities are higher. The S&P is trading above yesterday's range. The Russell's trading inside of yesterday's range. The Russell being the weakest of the bunch, and generally lagging. The Nasdaq is trading above yesterday's range as well. Again, it's a mixed bag in here. In terms of the calendar and what's scheduled. And why is my calendar blank? Not a good sign. In terms of the calendar, what's scheduled, we had GDP growth out of Germany this morning, came in line. We had market manufacturing out of Germany, also another high-impact number, came in line. ECB's President Lagarde gave a speech at 3:30 a.m. Eastern U.S. time. Great Britain's market manufacturing and services came in. Those both came in weaker, 48.3 versus 49 on manufacturing PMI. Services PMI came in at 48.6 versus 50. And then for the U.S., we have several numbers that kind of pop up 15 minutes after the open. The U.S. market release manufacturing PMI, services PMI, and composite. We do get Michigan sentiment final, which isn't the same as the preliminary. Generally, it's a lower impact number. That comes in at 10 o'clock, a half hour after the open. And then that is all she wrote. Of course, the Baker Hughes rig count, the prior 674. If you haven't looked at crude lately, crude has really broken out above the balance we've had over the last several weeks. And it looks to me like it's a firm break higher in crude, and it's likely to continue to squeeze short. So if you're in crude, just make sure you really know what you're doing and you've defined your risk if you're looking to short the product on anything but a short time frame. Let's, as always, switch gears and take a look at what was expected yesterday. This is going to be very brief, and the reason it's brief is because, let me turn down my feed. The reason it's brief is because the market blew out both the primary scenarios right off the open. The market ended up pushing lower. My third scenario is a push higher with a drive lower impulse down, consolidate below the overnight low, and finish somewhere in the lower range. I didn't draw it on here, so I can't claim it. But here's what actually happened. We had okay volume, 952,000 in the pit session, and immediately right off the open, this thing just wanted to sell on an impulse immediately. And so the play in this situation is to wait for a pullback to the mid area. Mid happens to be right on the edge of a key stock zone area at 3103.50 yesterday. It's 3104 today. Also, you have the mid, you have the stock zone, and then we're looking for a continuation play. So we're looking for this last low to be taken out. Does the same test again on mid, and then impulses even further. So now I'm again interested in the mid back here. The mid back here did not yielded 2 scales, but really could not challenge the IB low. We have a range extension down, so the next scale out is 2 ticks ahead of the IB at 30.96, and it went and turned around at 30.97. And then once it breaks above the mid, then we're looking for pullback to the mid and a continuation on an aggressive trade, not a structured trade. And that actually kind of happened. And then from there, it's trickle down, trickle back up. But look at this profile, just a beauty. Look at that taper, balance, taper on the low. See that? It's beautiful. This is a volume-based profile, and it's really beautiful action yesterday. The market really balancing out inside of the prior day's range. Could not challenge the low. And the expectation was if it was going to go anywhere, it is likely to retest at 91.50, and it wasn't able to do that. Yesterday was more of a scalping day than a structured trade day, and may have seen some frustration. Notice the delta throughout the day was just really, it had a hard time holding above the zero line. The zero line is right here, kind of hard to see in that noise there. But for most of the session, it really could not participate to the downside. So this is my relative volume delta chart. The yellow is everything above 100 lot on the print, on the orders, and everything that's white is 10 to 99 lots. Everything that's orange is 9 lots. 9 lots or less, and the bar chart is the actual total delta. And what happens with this feed is, and the software, is it reassembles the trades that have the same tick ID, so we get to see the trade on the order as it was intended versus what everybody else reports, which is the fills. And looking at delta using the fills is kind of misleading. We're bringing back the data to pre-2005, before the CME started breaking up the large-sized orders. But what we see in this chart is we have pretty good participation on the sell side by very large lots, 100 lots or more. And then it kind of goes back, and those guys just go to sleep. I mean, they just don't do much until the close, and then we have this movement, to news-based movement on the close, and it's just whipping around. But overall, the larger participants were looking to buy. The large lots were buying early against the very large lots. Almost looks like they're filling those very large lots, and then they go in the opposite direction later on. Small lots didn't do much throughout the session, with a little bit of selling on the close. I don't want to fog things up here for you. The more you watch, the less likely you'll execute perfectly. And our job every day is to come in here with a plan that's hopefully distilled to a set of actions once we see how the market's trading, and then to immediately execute on that plan. And the more you add, the more lost you're likely to be, in my opinion. So that carries over into the overnight session. The overnight session in Chicago starts right here on the reopen at 3:30 Central, even though the exchange defines a new session at 5 Central. I look at everything outside of the pit as the extended hours. And we reopen right where we closed, and the overnight inventory is mostly above the closing line, which means that it's mostly long. I'd say eyeballing it probably 95% long, and we have a high that was that went right up to the high of the previous overnight session, and it was looking kind of weak. Quite a bit traded up there on the high. 417 contracts traded at the high. It doesn't have a very good taper, and most of the session was spent inside, at right at the prior day's initial balance, with VWAP, mid, and the VPOC in the same area. The overnight session is relatively balanced, pretty good volume, nothing special. And overall, the overnight session is saying that they're accepting higher value, right? They're moving the point of control higher, accepting higher value, testing the prior high, and are holding steady up there. It just looks like it wants to push higher. But that's how yesterday was kind of geared up as well. Remember, yesterday we had an impulse up, a little bit of selling. We still had the point of control VWAP and the mid in the same area, and the market was well above that. And what do? We immediately go down to the overnight point of control and probe lower before holding steady for the session, bringing our VPOCs in line with the overnight session. So it's, even though the overnight session is kind of telling us one story, once we opened, sellers really came in early and with some size and really sold off on market on open. So we use the overnight session. We don't ignore it. We use it as a kind of an indication of what the global interest is this morning, and that tends to inform us quite well usually of what we should expect next. Next, we're going to look at CT Bookmap. CT Bookmap since the reopen. Here's what's taken place. Come on, baby, load. There you go. The reopen, the dip below the prior close, and then from there, it's really consolidation, news, and then a push up, and we've been sitting sideways. We've gone back to the scene of the crime right here, 3106, and we've come back to the scene of the crime, and we've been sitting there. We've been testing this 3106 again and again and again. So we're in a box right now with the overnight session, and the order flow is showing that really there isn't much clarity here, but we're in a box between 3105.50-ish to 3111, which has been a key area for the last couple of days. I'll show you that again in a minute. It's been kind of sitting in between these areas. There's a stock zone up here, stock zone down here, and so we're in between here and holding steady. The prior high, the prior day's high, is right in here at 3109.75. So we're kind of opening. We're opening basically almost exactly where we opened yesterday. So the market has checked below. As I said yesterday, the market has checked below and is expected to move higher. Yesterday's recheck kind of threw a wrench in things immediately, but that's good to see. Again, the Monty Hall problem. As soon as we see the market contradicting what's expected, it gives us a better opportunity at assessing the other side. Liquidity, steady liquidity in the overnight session at 31.15. That's an option strike as well. 31.19 and 31.20. Liquidity below at 04. A little bit at 3100 right here. That's expected to trade out, and 97.50, which is a key area. And then below that, 93.75, with the low being 93.50. These are the key liquidity zones. Let's check even farther up on the full depth to see what we have. Let's get rid of yesterday's range to color in a little bit better. And you could see with a further look that the next key area up's 31.30 in terms of liquidity, in terms of offers, and in 31.40. No surprises there. Again, key strike prices up there. So that's what we've got. Now, because it's Friday, I'm going to ask you to take a moment to this is the I think the next Friday will be Black Friday. Next Thursday will be Thanksgiving here in the U.S., which is a national holiday. And likely Wednesday, actually next week, the whole week next week traditionally has really anemic volume as people take advantage of taking off Monday, Tuesday, and part of Wednesday, mainly Monday, Tuesday, and then gaining an entire week off. So not much gets done in this country next week. Next Friday is Black Friday, and then following that, it's the end of the month. We normally take the last Friday of the month to ask everybody to type in where they're hailing from, what city, if it's relevant, what province or state, and what country are you hailing in from. If you're not part of the live broadcast, that's cool. Just put it in the comments of the video when you're watching. There's a comment section below at YouTube. And if you're on Periscope, you can just tweet at me, futurestrader71.com, at futurestrader71, and you can let us know where you're coming in from. Why am I doing this? Because it's all about community. Ever since I got into trading, my prop shop was built around community, and all of it's about community. So just punch in where you're from. The other piece that we have to deal with on Fridays is this incessant request to hit the like button. It is Like Friday today. Hit the like button. It makes it easy for other people who are searching for futures trading, risk control, those types of things. It makes it easy to find these videos, and hopefully they'll get the help they need as one option of many, I'm sure. The other thing I have to throw at you, unfortunately, is this petition. I'm actually looking to set up a meeting with the first week of December with one of the people. Thanks to Anthony Crudelli for hooking me up with a guy he just happened to interview who does it takes a big part in the assessment of the product and its implementation with the CME. Hopefully I'll get to meet him. It's a really cool interview by Anthony Crudelli. The gentleman's name is Derek. I forget his last name. I apologize. But it's something that's in the works here, folks, and I need your support. FT71.com/MCL, FT71.com/MCL, all caps. It's in the chat box. It's also in the description of the YouTube video. Please click. It takes 15-30 seconds to sign it. Get it signed. I'm not going to spam you. I need your name in the petition so I can put it in front of them and push this product along. It's a really important product to diversify into a different market sector. Okay, enough of that. Let's go back to looking at what's expected for today. So what are the key plays for the day? So one of the first things I want to do is expand this profile forward. And here's the thing with expanding this profile forward. This profile has a point of control, 31.19, a key area above 31.19. You got to keep an eye on it. So the levels that we want to watch, unfortunately, we're too close to it for it to matter probably this morning. 31.11, right? We have a clear double bottom, 31.11. You want to watch that area. And then above there, 31.19, not only is it the MC point of control, this black line, but it's also a top there and there. It's a price action based level. On top of the fact that it's an MC point of control, this is the area that I'm expecting the market to kind of butt its head against. Butt its head against. It's been a long week, folks. Butt its head against before it consolidates, and if it breaks through, I expect it to pull back to that area before it challenges what? 23. Our levels for the week haven't changed. I expect it to challenge 23.50 and then all-time highs if it takes out that 19. Okay, so above the 19, we may get a pullback for a continuation up to 23 and then 28 in the S&P. So what's the expectation for aujourd'hui or today? So here's what we're looking at. We're right on the edge. My primary expectation, given that we are imbalanced, my primary expectation is a likely push lower, consolidate into 31.06. It may push down into 03. 03 has been another key area. Again, it's a stock zone for me. If I turn it on, right in there, see that? And, you know, it might bounce here or it might bounce up. And I'm looking for an impulse or a squeeze to take us back up over 31.11 into the overnight high, the naked point of control remaining, and then a trip up into 19. 19 is expected to get a reaction if we get above. I expect it to hold above before we, depending on what time of day it actually gets there and tests, it may end up closing at it. If it does it early, I expect that to be a pullback long area. If we can find a good area to lean against, a zipper to lean against for the long into 23.50 and 28. That's the story. So that's the narrative for the primary trade idea for the day, the primary scenario. The goal is not to predict the market as always, but if it does, I've identified the key areas that I need to watch out for. That's the point of the exercise. If you're not doing this exercise, I believe you're not really getting in line with the narrative. You're not really running at speed, and it's really important. The secondary is an open auction in or slightly out or slightly in range. Consolidate, push into the naked point of control, hold steady, and then fall back into the range, and then retest that 03, 04 area and hold steady into this weekend. Again, please remember that next week is kind of a holiday week, and we don't know what to expect. The tertiary, the third scenario, because we really have done a lot of exploring to the downside. And by the way, when I said it, here we have a clear test into the prior range at 91.50. I talked about this 2 days ago, actually yesterday, 91.50, and it finished strong back into the balance zone that it was in, the gap up above 31.03 and a quarter. That's the gap high, and 98 and a quarter was a gap low, and it did it again yesterday, and that's why I'm emphasizing the long side yet again today. Yesterday happened to do a retest, and it may do it again, and that's really the third scenario is an attempt higher that ends up pushing lower for a higher low, kind of squishing open test, drive lower, kind of squishing the weak longs into the weekend, and then pushing back up and holding steady in here. That's very, very possible given the context of Friday going into the weekend with this news kind of environment, plus the fact that next week is likely to be pretty slow. So funds might square up, and we're not far from all-time highs. Sorry this took so long. I hope you gained something. Don't forget to sign the petition. ft71.com/MCL, all caps. I'll be here Monday, Tuesday. I believe I'll be here Wednesday. Definitely not here Thursday. We'll be here Friday next week. Good luck.